Hello, chart watchers and DecisionPoint faithful. Welcome to this October 5th, 2020, Monday DecisionPoint show with your hosts, Carl and Erin Swenlin. It's our job to prepare you for the week ahead, and we have lots to share with you today. How are you doing today, Dad?
Well, better than usual.
Better than usual. I like that.
Yeah.
Not much changed over here. I don't have much to add, so I'm going to go ahead and get into the agenda. It's pretty warm here, though, I have to say. All right, so we're going to talk about the market rallying today and what we're thinking about as far as going forward, whether we're going to break out or not, or continue this rally. We're going to talk about climax analysis, and this is something we cover often in our DecisionPoint alert reports on our website, but a lot of times even in our free space, in the free blog, we'll talk about the way we look at climaxes, initiation impulses, exhaustions. So we're going to go into that a little bit more deeply than we normally do. We're going to talk a little bit about stalking the energy sector right now. I have some thoughts on that, and I know Carl does as well. And then Carl's going to talk to you about options trading mania. I think that'll be a very interesting subject. And of course, I'm going to finish off with the diamond of the week, and I do say diamonds because I will show you one extra one. I did a chart watchers diamond of the week, so I'm going to present that one, but then I'm also going to give you one brand new just for the DecisionPoint show. All right, so let's go ahead and get it started with talking about this market rally. What did you think today?
Not much. I was busy eating lunch. Now I came in here about 30 minutes ago, and I'm not surprised. And you know what? I've discovered some information. I think it'll be useful for everybody. That one of the things, a major issue behind these rallies. So, and that's what I'll get into with the options discussion.
Excellent. So, I mean, at this point, what I'm looking at, what we're seeing is obviously this trading range seems to be back in favor, if you will. I know I haven't really been looking for much of a breakout here. I mean, I think there's some things out there that could maybe give the bulls some hope out there. I mean, certainly with the rising momentum and positive RSI, that all looks pretty good. And, you know, we traded above the 50-day EMA for last week, and now we're continuing up past the 20-day EMA. So there are some positives on this chart. But one thing I noticed right off the bat, Dad, and I don't know if you did as well, is the lack of volume today on such a big and powerful rally.
Right. It's definitely not volume behind it.
No. And it has been kind of odd. I know a lot of people have talked to me about it, you know, how we've had kind of low volume really through a lot of what we're seeing here. And, you know, for myself, and I know for you and many of the other analysts, you know, when we want to look at the power move, right? If you get a big move in one direction or the other, you really want to see the volume accompany that move. And, you know, we really haven't seen a lot of that. It's all been pretty much, you know, below the annual average for volume. So it's kind of an interesting situation we have right now.
If you look at the volume in August, you can see it was very low towards the end of August, and yet the market went up. So yes, the market can go up in volume, but it's not an ideal situation, and you always want to feel more cautious in that case.
Right, and of course the VIX is on the inverted scale here below its moving average, and that's usually a sign of internal weakness or the possibility of course, experiencing some volatility. For example, back here, beginning of September, that really encompasses all of this crazy movement we saw back here. And, you know, until we got above that inverted scale moving average, you know, that's where the best we've really gotten out of it was mostly a consolidation. Although today, like I said, it's a pretty nice looking rally. All right, I am going to pass it to you to start the talk about climaxes. I think I saw you had the climactic chart up, and since this is one of those analysis processes that you've come up with, I'm going to let you take the lead.
Okay, and allow me to change the venue because I'm not immediately prepared to talk about the climax. Uh, I was really wanted to launch into the options because
Well, let's
that
do
was
that. There's no reason we have to follow it.
right. I just it's a, you know, I want to be sure I cover it and we have time to discuss it because you know it's like a real eye opener to me. You notice, you know, well, market action in this V area here has it's just mystified me to some extent because you know the volumes were so high, but the moves were so huge. And we were talking 5% in a day, that kind of thing on a market index, just not done. And I, I, I read one of the newsletters I read is the evergreengavcal.com blog. So the address, if you want to go read this sometime, it's blog.evergreengavcal.com. And I read it. It's not a technical analysis. It's more fundamental analysis. But there's some great insights on that. And I'll just, you do a little fair value here in terms of this chart that was done by SemiTrader.com's Jason Gopher. It shows the single option contract trades by basically that's the small investors, and this is a chart as of the end of September. I'm sorry, the beginning of September, and at that point, this is a percent of volume that those small traders are composing, and they're at 53% of the total call volume at that particular time. And that's huge, and
Yeah.
that just shows you and that's what's going on with the market. Now let me tell you how it works. And this just to briefly cover puts and calls. A put is the option, gives you the option to buy 100 shares at the strike price. I'm sorry, sell 100 shares of this contract's strike price. A call gives you the right to buy 100 shares at the contract's strike price. So they give an example in the newsletter, and basically it's a trader buys a $1,500 call, which controls 100 shares of, say, Amazon. And the market maker who sells that call will hedge it. And there's a calculation that gives them what is called the delta, basically, which is what percent of that 100 shares do they need to buy to hedge that call that you just wrote. Follow me so far?
So far, yes.
Okay, good. And okay, now as the as the price of the stock goes up, the delta will change, and it will require them to buy more of the shares. So maybe it'll get up to 50% or 75% at the of the position. So they're not hung out too far, and so as it goes up, they're committed to more and more. And one example that they gave is like for a $1,500 call, the hedge on that would be $230,000 worth of stock.
Oh my.
Yeah. So you see what happens when you have that much demand as the market makers building up the hedge. That's creating a demand, which is causing the price to go up. And at the top or at the expiration date, that hedge has to be unwound. So that puts selling pressure on the stock in some cases. Now, when you have the option expiration days, essentially that hedge could remain in place on another option contract. That's the old that expires. You see what I'm saying?
Mm-hmm.
So anyway, so as it's going up, the extra demand is creating tremendous pressure for the stock to go up. But when you get over, like we had on the bear market here, the opposite is in effect, and you've got people bailing, and the hedge is being unwound at a breakneck speed. So anyhow, that's the thing, and I recommend reading the article. That sure will do better than I, but I'm somewhat an expert on options because long ago I lost my rear end playing options, and I don't play with them anymore.
Probably part of the reason I have never delved into that area of the market.
It's, one of the things about options is basically limits your exposure. Like a $1,500 option, you could triple, if the stock's going the right way, and in a certain amount of time. Timing is extra critical when you're dealing with options, and because you could be early. That's just the same as being wrong. So, any questions?
So what do you think might be causing that increase of options, the mania that's coming in for that?
It's I would call it similar to the .com bubble. You've got small time traders playing in an area where they're going to get killed. Most of them. Most options expire worthless. Most people lose money on options. So it's just something that people should be aware of. Remember, the thing is the exponential nature of what you can win is intoxicating, and being able to do 3 times on your money in just a short period of time.
Certainly, and with smaller positions that are required, it becomes a little bit more like gambling.
Exactly, and it's a dangerous game.
Yeah. Many people are doing well in it. I know a lot of my followers do that, but again, I'll give you my bullish and bearish outlook on a chart, but I'm not going to talk strike prices and deltas.
No, it's
all right. Do you want to talk climaxes, or should we?
Yeah, I can go to that.
Yeah, let's do that. I really, I've been looking forward to this. We've had a lot of discussions on our own about climactic movements, so it's probably a good thing to bring our listeners and readers in.
Yeah, my experience, at least hearing about climactic moves, goes back about 40 years with Gene Morgan charting the market at 1:30 in the afternoon. You may remember that.
I do.
And he used to talk about the client, but I never, I've actually recently put it together and basically looked at it in a disciplined way to try to come up with a way of defining it better and making it more useful. But we talk about climax. For example, here's a climax day. We've got high breadth, we've got high net volume, net AD volume, new highs. It's all the way around a very high climax day. Now, there are 2 kinds of climaxes. There's as an exhaustion climax, and there's an initiation climax. And that can be to the upside or the downside. In this case, I was pretty sure, and most of the time you're going to figure it out in in retrospect, but I had enough knowledge and experience to say to myself, this looks like an exhaustion climax, an upside exhaustion climax, because it's at the end of an uptrend here. So I was pretty sure that that's what we were going to see. I was right in that case. But the next day we had a downside climax. So was that an initiation or an exhaustion? Well, it was at the beginning of a potential downtrend. So I would call that an initiation climax. After that, we've got other climaxes. We've got a couple more downside. And in this case, they can be exhaustion climaxes. That doesn't mean that the downtrend has exhausted itself, but it means that that particular thrust is exhausted for a short time. In this case, it was for a day and a half, and then it went up the next day, and then up the following day, and then finally came down another initiation. I'm saying another exhaustion climax. I would call it. It's just not enough space to make it an initiation climax. Finally, we get to here. This was an exhaustion climax, and again, it can mean just that it's going to churn around a few days before it goes up. In this case, it turned out to be an exhaustion of the downtrend. And the following day, we got an upside initiation, and it looks like an upside initiation because that's at the end of the downtrend.
Mm-hmm.
As it turned out, that's what we got, not necessarily a robust advance. So,
of course, today we have climactic readings. I'm gonna look at it. So they're climactic to the positive side. They're coming kind of on the end of a short-term rising trend, although Friday, we had that deep decline. And so now we're getting a big pop to the upside. But I have to say, when I look at it, it does have the earmarks of likely exhaustion. What do you think?
I'm not clear on it.
Okay.
So this one, I was really pretty sure. I was not at all surprised by this.
Mm-hmm.
But this one, it's I just would hate to call it. But again, just be alert, be ready to. If it starts downside tomorrow, it starts down tomorrow. Surely this was an exhaustion, and possibly continuation of the downtrend will come. But yeah, a lot of times you're just doing it in retrospect. But right now we don't have enough clues. It is so churny in here, it's hard to say.
Right, very much. And I've been watching that for island formation. It's really starting to move out of that island. So if you look in the thumbnail, you can see the island is still technically there, but
right.
At this point, that original gap up is starting to look more like a breakaway, which does give us some bullish bias possibly to what's going on, but it doesn't mean that that's not an island anymore either.
Yeah, at this point, I would say, I would be slightly bullish on that as being an initiation climax.
Mm-hmm.
But
yeah, it's going to be interesting. It almost looks like a reverse head and shoulders here too. So the market made it hard today. It didn't break out.
Right.
It's usually a lot easier when you get a nice breakout from a consolidation range, and we didn't get that. All right, I'm going to steal the screen back.
Did you want to? Okay, go ahead.
Yeah, and we can talk.
To do energy? Or?
Yes, absolutely. That's exactly where I was going to go.
Okay.
So I did a look at our sector summary. And so I went into it for the energy sector just to see where the strength has been in energy. renewable energy is crazy right now. It just does not want to go down. If you want to talk parabolas, you can look at the solar chart here. This is the Invesco Solar ETF. So honestly, I mean, that seems to be the strongest area in energy. And, you know, there's talk, actually, we were just, I noticed today at StockCharts, Dave Keller was talking about maybe solar shouldn't be in the energy space. And you know, can't say that. When you look at this, it certainly has that, it seems to be skewing things a little bit, but I have to say, I still like that area of the market. I know it's kind of, you know, been extended here. But I just, you know, even when we get these overbought readings, like you can see all the way through July and August, all the way through, we were overbought the whole time. And we really didn't see much. When we did get the breakdown here, it wasn't, you know, it was somewhat painful. I mean, that was like a 17% pullback, but getting that bounce off the 50, and now we closed at the high for the day on TAN. And I have to, full disclosure, let everybody know I do own TAN.
It's coming vertical though, so watch out.
Absolutely is. And so what I do tell people, if you get in on these at the right time, which I fear I got in a little bit late here, but you know, I've already made quite a bit here, and setting that trailing stop now might be where I go with this, so I can still get some of this upside move, but I'm not really gonna get hung out to dry on a big pullback like this. But TAN is certainly an area in energy that I know I've been watching. But did you want to look at the sector chart?
Yeah, please.
Mm-hmm. But yes, definitely skewed to renewable energy right now, for sure.
It's one of the, I wanted to mention it because, you know, oh, we had a good day today, 3%. That was not really why I wanted to mention it. I was thinking about it last week just to bring up that it's the worst sector in the 11 S&P 500 sectors. And that's the kind of thing you want to just stalk it. You want to watch it and see how it's going. And for me, I want to see it try to do a double bottom. And that's what I'll be looking for in that. And you know, eventually energy's coming back as, you know, as the economy comes back. But we may have to watch this for weeks, probably months before we get anything good on.
And you know, something you can watch are the Silver Cross, Golden Cross index that we have on these sector charts. We have a chart like this for every single sector with all of these indicators on it. And so it's really helpful to be able to see where the, you know, what the foundation is for the sector. And when you see, and it looks like only just today or last week, we got it to 8%. Before it's been zeros. We haven't seen much coming out of the Golden Cross Index. That means that all the components in the energy sector, only 8% of them have their 50-day EMA above their 200. And none of them have their price above the 50-day EMA in XLE. So
right. They're all overbought. But look at March. You can see how long they can stay oversold. The indicators.
Mm-hmm.
Yeah, you like the RSI.
That's the same thing.
Yeah, but see how long they stayed at the bottom of the range. You know, they can stay oversold for a long time, and so that's why I say they're oversold. It's time to start watching them for sure, but I'm not, you know, ready to bid.
Right. I mean, when you see scooters this low, we want to start seeing those improve. I guess that coal, renewable energy, like I said, I don't know how long we're going to have that one in here, but coal would be the other bright spot for the industry groups here. And this is a way you can look at which ones, you know, here's your capitalization. Of course, a lot of these aren't even, we don't have scooters and such for, but it's one way to kind of look in and see where you might want to go look. I'm for example, arched pole. So it had this huge pullback, and you can see it's starting to make its way out. Although I have to say that that OHLC bar doesn't look that promising with a giant wick on it there. But those are the places that you can look. I've been, when I run my scans, just so everybody knows, for my diamond reports readers, I always check for energy stocks, because I want to be in on this. It is a matter of stalking them. So very good. Let's, I think we've covered everything except for those diamonds of the week. So I'm gonna bring one up. This was the one I put in Chart Watchers this weekend. So I presented this to everybody on Friday night. Obviously had a great day. You can't guarantee that's gonna happen, but I really like the setup on this chart. Certainly we've had a lot of move to the upside already, but as a momentum trader, usually a winner keeps on winning. We're not quite there, but we do have that 5 and 20-day EMA crossing over in the short term. So that helps with the configuration of these EMAs. And you do have a PMO buy signal that's coming in. And then look at all of the accumulation, all the volume coming in. And of course, that RSI has now moved into positive territory. This is pretty much a V bottom sort of setup here. You could say a cup. Maybe we're going to have a little bit of a handle here, but I'm looking at this as more of a V. And once you get about a third of the way up the V, that's when the pattern executes, if you will. And so the expectation is actually a move up to the top of the V on the left side, but also past that. So I think there's a lot of good things here. Look at the scooter is just starting to move up. So HOG, Harley Davidson, is on my list. And, it is on a run, but I do still like the solar space. I just would say get in there. I waited so long. I waited so long for a good pullback. And of course, I missed this one. Sunrun is one of the ones that I do like in this space. And it has had a little bit of a pullback. So I think that one could be interesting. And I do own that one. And SunPower is the other one. And I own this one as well. And surprisingly good day. Didn't expect that. But these are all, yes, they're very overbought, but we know that they can stay overbought and still continue higher. So, just something to consider. But HOG was a diamond of the week, and Sunrun and the solar space, I still just have to like that. It's just hard for me to stay away from that sector. So I think it's still got room to run, but just be very careful, because these stocks are due for a bit of a pullback. But the good news is like I've said, with checking these inspection tools, the pullbacks haven't been too horrible. Of course, SunPower's pullback was rather painful at almost 30%. Let's see, where's SunPower? Let's update here. This was another one. So this one doesn't get overbought quite as much. And this one did get overbought, and that's, a 23% decline. So just be prepared. I still think that we've got some run to go here on the solar, but it is just be nimble with those stops. And that pretty much concludes it, Dad. Did you have any parting comments?
No, just watch that vertical up move on 10 and all those renewables.
Absolutely. And the beauty is if you do get in even a little bit late, like I did, I've already put the profit in, setting those trailing stops, or even if you bring a hard stop up with you, I think you can protect yourself fairly well. And there's always that opportunity when you get that big pullback in these stocks to hop right back on board when they make the turn. So keep an eye. And that's all we have. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.